actually the move is bolder than we initially expected. So I think this also raised the hope for China maybe to be more committed to the other reforms. So now we are looking forward to more reforms coming out of China.
Now you talk about the reforms, but we know that these Chinese stocks, though, have underperformed for years. So to some extent, won't it expose Hong Kong investors to some element of risk?
Yeah, I mean, because I think for China, the problem is the market has been largely closed to offshore investors. So, well, in the domestic market, actually, the market was mainly driven by the retail investors, which is quite different from the advanced economies. So, I think the opening is good in the sense it will bring in more professional investors to make the market more mature. So, this, to some extent, could be supportive of the Chinese equity market in the longer run.
All right, but what about the Chinese retail investors who now may have access to Hong Kong? They're going to want to look there now, aren't they?
Yeah, I mean, for sure. Hong Kong will be interesting to them because Hong Kong seems like it's more mature market for the retail investors in China.
And that could be at the detriment to the Chinese stock markets. But if we're taking a look at the ways of how China is implementing these reforms, are quite interesting, really. It's all a plan to open up their capital markets. But do you think they're going about it the right way?
Well, I think so far it's still going on the right way because really China is on the kind of the gradual movement to open the capital accounts. So basically, you can see China, everything is operating under the so-called quota system. So you start with the QFII program, which is under the quota system. Now this two-way cross-border investment is also under the quota system. So everything seems like manageable in a manageable way.
Right. But we know also that China's had a series of slightly disappointing data. We saw trade data, in fact, plunging quite dramatically yesterday. And today we're seeing inflation numbers coming out as well. So are you expecting more of a sort of engineered slowdown in China?
Well, I think for today's inflation, we're going to see a slightly pick up from the February numbers. But that's largely because of the high base effects from last year. So in fact, on the month-on-month basis, we actually still see the inflation remain softening. So that inflation is not a key concern for China. But yes, I think overall speaking, for this year, seems like the Chinese economy is slowing down. But personally, I don't really see the systemic risk, which means I'm not going to see the collapse of the Chinese economy for this year.